Welcome to the Money and Wealth Show. Brought to you this week by AmericanManganeseInc.com. This week's host is Victor Adair.
Hello, we're here today with Eric Coffin. Eric and his brother David have been well known to me for a number of years. I've met them at mining conferences. We've had times when we shared panels together. I'm very pleased to welcome you to the show. We'll get into what exactly your company does, hardrockanalysts.com. But first, I know you've got like a zinger coming up for us in terms of some of the news that's coming out of the Yukon, where there's been a big play. Let's save that for just a minute.
Okay.
Let's save that for just a minute.
We'll come back to it.
I know more or less what you do.
Yeah.
But maybe you can fill us in for the folks that are watching here. What does Hard Rock Analysts really do, you and your brother?
Well, I guess the 1 minute version is David and I grew up in a mining family. I went into the finance side of things. He went into the geology side. About 20 years ago, give or 25 now, I guess, we started a consulting firm, mainly dealt with exploration companies. So we were dealing on the ground, if you will, with these projects. And then about 16 years ago, we decided to start doing a newsletter. I mean, people kept asking us about, what do you think of this deal? What do you think of that deal? Mainly from the technical side, from the project side. That became the Hard Rock Analyst, which is now 3 publications. A monthly, another monthly, and sort of in the middle, it's for more frequent updates and an alert service. And basically, we deal with usually junior companies. I mean, we consider our end of things to be more the exploration end. Mm-hmm. That's where we think we can add value. We cover precious metal, base metal explorers. Basically, we take a look at the company, the projects, the management. Do the projects look like they've got what it takes to maybe be a mine someday? What do they have to do to get there? Can management finance that at reasonable prices? And what's the news flow that's going to generate gains in a decent market? And essentially, that's what we do. We go from some of them fairly early stage. Most of them are companies that have some sort of a discovery already. They're drilling and maybe growing at a deposit. We follow a few of the larger companies and the producers, but generally those generally come onto our list because they take over companies that we follow. I mean, the last 8 or 9 years, we've probably had 20 odd companies that we follow have been taken over by majors for their projects. So we sort of back into them. But we see our part of the space where we can be most effective to our readers as exploration and development companies, metals.
So you and your brother David, and by the way, you sort of stay at home, and David travels the world looking at projects, right? So you look at these mining companies and what they're doing, the people that are involved, and that you're essentially, as far as subscribers are concerned, you're doing the homework that they would have to do if they were really wanting to be professional investors themselves.
I mean, essentially, that's what we do. We filter. We try to filter for our readers. We get hundreds, literally, of news releases every day. We go through these. Occasionally, one will get our attention. Because we've been doing this for a while, and because we were in the business, that is the sector before that, we know a lot of the players, and so quite often guys will bring new deals to us and show them to us because, out of friendship, if nothing else. And if we think something's has got legs and that it's priced currently, I mean, our benchmark, if you will, you're dealing with high-risk stuff here. I mean, nobody should have too many illusions about that. So our sort of minimum benchmark is, can we see something in this company that if things go well on the exploration side, it's going to at least double in the next 12 to 24 months? I mean, that's sort of the hurdle for us. And you combine that with, in terms of how many companies we follow and how we follow them at any given time, obviously how the economy and how the market's doing weighs on that fairly heavily, and how we think a particular commodity or set of commodities will do. I mean, lately we've mainly been focused on gold and silver deals because we had some concerns about base metals, but that comes and goes as well. When we think it's the right time for base metals to move, we'll start leaning more on that side of the sector and covering more of those companies. It just moves based on what we think the market's going to do.
Okay, we'll be right back with Eric Coffin, Victor Adair here. We're going to take a break, and we'll come back, get his base view on the world, and then from that, deduct as to what he's buying and selling, what he's recommending to his subscribers to be doing in the market.
Always consult your investment professional before making any investment decision. You're watching The Money and Wealth Show.
American Manganese Inc. has a manganese deposit in Arizona, indicated 6.7 billion pounds, inferred 8.9 billion pounds, potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at TalkDigitalNetwork.com. Here's Victor Adair.
Well, welcome back. We're talking with Eric Coffin. Just before we took the break, I asked Eric, you must have to develop a base view of as to how the world is going to be, and from that you deduct or you back into your minor, or what do they call it, micro views,
Yes.
right?
Yeah.
Okay, so what's the big picture?
Well, macro view, say macro long-term view, if you want to view it that way, we're coming out of what I would call, a debt-driven recession. That's substantially different and unfortunately substantially worse from a normal cyclical recession, what you'd call a warehousing cycle recession, where you simply get excess inventories, things slow down, they get worked off, they go back up again. Debt-driven recession, really to get fully past that, involves deleveraging at both a government and an individual level. That's the process we're going through right now. What that means really is that probably for most of the G8 certainly, you're going to see relatively slow growth for a considerable period of time. I mean, several years, I would think. You simply have to get to the point where you can work those debts down enough that you're back into a comfort zone, and consumption as a percentage of your income, any given person's income, goes up again. That's sort of where most of the developed economies are at right now. It's something that I think is familiar to Canadians in particular, because it's not really that dissimilar to what Canada went through 15 to 20 years ago, when our budget deficits got out of control. Government had to start going on a serious austerity program. The GST was brought in. I mean, none of that stuff was fun for anybody, but it got the job done eventually. You basically got the States, Japan, most of Europe in exactly that situation right now, except they're at the start of the process, unfortunately, not the end. Well, that's unfolding. Things are going to be dangerous. One of the concerns that the market's had for the last several months, and a well-founded one, is they haven't felt that the European Union in particular has been dealing with the issue. Everyone knows Greece, for instance, simply cannot realistically carry the debt load that it has right now. Anyone that looks at any kind of a realistic interest rate looks at how much debt they have a percentage of GDP. The numbers don't work, period. They just don't work. There's no way to make them work. So the bottom line is, how do you ring fence and that situation and put some backstop behind the financial sector? And for that matter, what do you do in terms of write-downs? I mean, what does the rest of the EU do? Are you guys going to pay off these debts? Are you going to not pay them off? You're going to boot them out? This has been up in the air now for months. On top of that situation, we had this legislative melodrama. Well, melodrama is too polite a word. It was a farce in Washington about debt limit increases. Those two things drove people right out of the market in the last few months. What you've got now is a fairly high level of fear. When you look at things like the VIX index, the volatility index, you look at the OIS spread in Europe, which is basically the spread between risk-free debt and interbank lending. That's gone from basically 0 to about 1%, which is a fairly high reading for that. That's telling you the banks are getting nervous. They don't know who owns the really crappy paper, who's going to have to take the big write-offs. Until that washes out, the market's going to be fairly weak. I think that's going to take some time. I don't think it's going to take forever, not because the deleveraging is going to be a short-term thing, but in terms of the European situation, they don't have forever. I mean, they're acting like they have forever, but they don't. They've got to do something fairly soon. I mean, the market is saying loud and clear, make a decision. There's been enough discounting in the last 3 or 4 months. Most of the large indices are 20-25% off their peaks of the spring. That's really priced in probably a fairly horrendous situation in Greece. It's a pretty small economy after all. It hasn't priced in all of the potential side effects in terms of the financial sector.
Well, so that certainly contributed to the Toronto market.
It's just everything goes. When you basically, it's been, especially in the last month or so, it's this big risk-off trade.
Yeah.
And in a risk-off trade, people go where there's the most liquidity, which is basically the U.S. Treasury market. Mm-hmm. I mean, ironically, the U.S. gets their bond rating cut, and their yields just keep dropping and dropping and dropping because everyone's hiding in the Treasury market. And commodities, which are, of course, a big part of the sector in Toronto, collectively, they're probably the biggest part of the market. Those are considered by most people risk-on trades, inflation trades, if you will. Mm-hmm. People go to those things when there's growth. Mm-hmm. So you saw energy prices come off. You saw most commodity prices come off. Base metals, which are very strongly tied to people's assumption about growth, have really been hit hard in the last little while. Gold, on the other hand, did very well until quite recently. In our opinion, two things have happened there. One was just profit-taking, pure and simple. Gold went to $1,900 after there's lots of profit to be taken. Two, I think there's been a lot of margin call activity in the last 2 or 3 weeks particularly. That's generated some selling. Mm-hmm. Usually in a margin situation, people sell their profitable stuff first. The third thing is, because the situation in Europe has degenerated, at least in the view of the market, the euro itself has been hit fairly hard. That's actually driven the US dollar up. The combination of people getting negative on the euro and money at the same time running into the treasury market, the capital flows, the US dollar index has gone up close to 10% in the last month. Mm-hmm. And a lot of people trade quite directly against that, and silver and gold. A lot of people trade them as anti-dollars. So with the US dollar doing well in a relative sense, that was just added on top of the margin impacts and the profit-taking impacts. So you've seen this big short-term drop in gold and silver prices that's freaked a lot of people out. And that's a big sector in Toronto.
We've had a situation then where it's almost like it never rains but it pours.
Yeah.
Toronto markets come down a lot. The question, of course, it's hanging out there like the elephant in the room is, is it time to get back into the market or not? We're going to take another break, but we'll come back. And before I get to that particular question, before we get to the talk about the Yukon play in particular, which we mentioned at the top of the show, I want to ask David about the demand side. And on the demand side of the commodities, you got to say one word, and that's China. Yeah. Hard to know whether or not anything that comes out of China, whether you see so many conflicting stories. Want to get his opinion on that. So we'll take a break. We'll come right back. You're listening to Victor Adair and Eric Coffin. We'll see you in just a couple of minutes.
You're watching The Money and Wealth Show.
Molycorp Gold Corp has substantial assets. Magnesium deposit, inferred 52 billion pounds. Molybdenum deposit, indicated 1.9 million tons. Inferred 1.8 million tons at 0.087% MO. Past silver producer, average 182 ounces per ton. Trading symbol, MOR. Website, molycorp.com. Or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at talkdigitalnetwork.com. Here's Victor Adair.
We're talking with Eric Coffin here, the hardrockanalyst.com. Before we took the break, Eric, you described sort of the it never rains but it pours litany of problems that have helped bring the Toronto market down almost relentlessly, it seems, from the spring. We've seen declines in base metal prices, precious metal prices. I mean, I guess the looming question is it time to start putting the toe back in the water here as a buyer? But one thing we didn't touch on, we mentioned, was what do you think about China? I mean, that's the big story on the demand side for the commodities. Do you have a clear picture, or do we just guess?
At some level, you guess. I mean, public statistics aren't fabulous out of China, but they're probably better than they're given credit for. We've always been pretty comfortable with the China story and the BRIC story in total, if you will. Mm-hmm. We always watch China closely because when it comes to metals, base metals particularly, and bulk materials like iron ore, I mean, it is the marginal buyer, period, paragraph. So so goes China, so goes everything else. We haven't seen a lot of slowing lately out of China. That gives us some comfort, but the guys buying the stuff in China are buying it to make things. Some of those get sold in China, a lot of them get sold in other places, so they aren't idiots. They're like us, like you, they're watching the other markets and going, well, if things are really going to slow down there, we better cut back. Mm-hmm. There hasn't been a lot of cutback yet, which gives us some comfort, but I don't think we can assume it isn't coming until we've rolled forward a few months from this sort of disaster scenario we've had in the market the last couple of months.
All right then. So let's come to the $64 question. Is it time to get back into the resource stocks? If it's not, would there be something that you'd be looking for that would indicate to you that maybe it's time to get a toe back in the water? And then let's talk about the Yukon thing we mentioned at the top of the show.
I think what we want to see is some sort of lasting resolution to the euro crisis. We're not saying everything has to be overdone and settled. But frankly, it would be nice to see the EU do what Paulson did in the U.S. in 2008, pull out the proverbial bazooka. Let's see some kind of a rescue fund big enough that it's going to scare guys out of the short side of the bond market, and that at least gives everybody some breathing space. We see that. I think what we would see then, assuming they do it, is some better perceptions of the market. You'd see the euro strengthening some. That's going to help gold and silver first, I think. The other thing that we want to see is continued okay economic statistics. We're not expecting to see great ones, but we would like to see some evidence over the next 1 or 2 months that all of this market craziness hasn't scared people to the point where it's basically going to become a self-fulfilling prophecy as a recession. I'm not seeing recessionary numbers yet in the economic stats I look at every day, but it's close. Mm-hmm. Yep. So I mean, I'd like to see a little bit of an uplift in those numbers, nothing dramatic, but just enough to give me some comfort. There's no double dip. That's the set of conditions I want to see to jump back in on stuff myself. There's stuff that looks cheap, but that doesn't mean it won't be cheaper.
Okay, so not really time to go in yet.
No, I think you need to see some concrete resolution on the euro side. They need to do something that just ties off the whole Greek problem, or they have to say here's €1 trillion that we're going to use to backstop this set of banks that we know hold a bunch of this crappy paper. Like, it's got to be not talk. The market wants to see them do it.
Well, certainly we go back to 2008 when they brought the TARP in. Yeah. I mean, the gold price was down, let's say, in the range of $750, and then the gold price really started to rally after that. Before we run out of time, let's come to the thing we mentioned at the top of the show, the Yukon. There's been a lot of activity up there. Mm-hmm. We've got, the proverbial, we've got a minute. So what's going on up there, and what are you looking at?
The Yukon was by far the biggest area play in the world this year. It's one we were in very early. Our readers have done very well on a few situations. We've been watching it very closely this year, and there was one giant issue that hung over the whole thing. Really slow lab turnaround. Okay. So we went into September, things were getting cold. A huge number of these companies have basically had no results because the lab turnaround was so slow this year. There was simply nothing for people to make a decision on. That's one of those areas where you've really seen people scared out of the market in the last couple of weeks because they know that winter's coming. Basically, I think what you're going to see over the next 2 months is a huge amount of results come out of that area. And I think that's an area you got to watch really closely because we could get some real positive surprises there. It's a difficult market to have them delivered in, but there's going to be companies who start delivering results in the next week or so who will actually keep delivering results till December or January just because the labs were so slow. The winter, in terms of news flow, is going to be a short one this year. But the next little period, this is going to be the ones where we find out whether anybody truly made a new discovery this year. Mm-hmm. A lot of that news comes in the next 2 or 3 weeks.
Okay. We've got a minute left. Let me do this. We're talking again. Eric Coffin, hardrockanalyst.com. You and your brother have been doing this, analyzing the junior sector of the resource market for years. You stay at home and crunch the numbers. David goes and bangs on rocks all over the world. Again, we've got literally 30 seconds. Is there a spot in the world outside of Canada that's really kind of caught your eye right now?
We like Argentina a lot. Great geology, not particularly overexplored. Lots of room for good gold and silver discoveries. We follow some things actually in Schefferville in Quebec because we like the iron ore story, although it's very pro-cyclical, so you don't need to go near those stocks until the market bottoms again. And I think the third area, if the political situation clears up a little bit, is Peru. The market got very afraid of Peru when these new guys got elected, but our sense is I don't think he wants to really rock the boat that much. And Peru's always been a fantastic area geologically, and it's been discounted a bit because of politics, pure and simple.
Thanks for that. We're going to take a quick break, and we'll be right back. Thank you.
You're watching The Money and Wealth Show.
American Manganese Inc. has a manganese deposit in Arizona. Indicated 6.7 billion pounds. Inferred 8.9 billion pounds. Potentially the lowest cost producer of electrolytic manganese. American Manganese Inc. has a projected cash cost of 44 cents a pound. The metal trades near $2 a pound. Do the math. Trading symbol AMY. Visit AmericanManganeseInc.com or phone me, Larry Ray, at 604-531-9639.
The Money and Wealth Show is archived online at TalkDigitalNetwork.com. Here's Victor Adair.
Well, welcome back. We've been talking today with Eric Coffin, and Eric and his brother David have been in business together for about the last 20 years or so, covering particularly the resource and mining space in Vancouver, from the junior explorers right through to the major producers. We're all aware that we've had a major decline in the Toronto market here for the past several months. If I have a takeaway from what you had to say today, you're watching, but you're certainly not diving back in here right now. If we see a resolution in the European financial puzzle, that would certainly be a big help. And of course, the Yukon play. You see there's some opportunity there that people want to really keep an eye on what's going on in the Yukon area. We want to say thank you, particularly to our host, Fritz, here at Churchill's Licensed Lounge at the Holiday Inn and Suites in North Vancouver. And I'll remind you once again, go and have a look at hardrockanalyst.com, the website of David and his brother Eric. I recommend them to you, and I thank you for watching today.
Thank you. Thanks, Rick.
You're welcome.
The Money and Wealth Show has been brought to you by AmericanManganeseInc.com.